Gold is under pressure, but it's refusing to break. Even as Wall Street traders turn increasingly bearish, gold prices are still managing to stay above the critical $4,500 level. And that's creating a major divide between professional analysts and everyday investors. This week, the precious metals market experienced sharp volatility. Rising Treasury yields, a stronger U.S. dollar, and growing fears of additional Federal Reserve rate hikes all weighed heavily on investor sentiment. Normally, these factors would send gold tumbling. But despite the pressure, gold continues showing resilience. Analysts say geopolitical tensions, inflation concerns, and fears surrounding the global economy are still driving safe haven demand. Investors may be nervous, but many are clearly not ready to abandon gold just yet. The big question now is simple. Is gold preparing for another breakout, or standing on the edge of a major correction? Wall Street sentiment has shifted dramatically over the past few weeks. According to the latest market survey, many institutional analysts now expect gold prices to weaken further in the short term. The reason? Interest rates. The Federal Reserve continues signaling that inflation remains stubbornly high. That means the possibility of more rate hikes is still on the table. And higher interest rates usually hurt gold. Why? Because gold doesn't pay interest. When Treasury yields rise, investors often move money away from gold and into interest-bearing assets. At the same time, the U.S. dollar has strengthened significantly. A stronger dollar makes gold more expensive for international buyers, reducing demand worldwide. Some analysts also believe traders are becoming more cautious after gold's explosive rally earlier this year. They argue the market may simply be overheating. But not everyone agrees. Even while Wall Street grows pessimistic, retail investors, known as Main Street traders, remain surprisingly optimistic. And that growing disagreement is becoming one of the biggest stories in the gold market right now. While institutional investors are sounding alarms, everyday investors are sending a completely different message. Main Street traders remain bullish on gold. Many retail investors believe the current weakness is temporary and see gold as protection against a much bigger financial storm ahead. Concerns about government debt, sticky inflation, banking instability, and global conflicts continue pushing investors towards safe haven assets. For many Americans, gold represents security during uncertain times. Some analysts say this divide between Wall Street and Main Street reflects a larger issue inside the economy. Professional traders are focused on short-term monetary policy, while ordinary investors are worried about long-term financial stability. And there's another factor keeping bullish sentiment alive. Fear. Markets remain extremely sensitive to geopolitical developments, especially tensions involving energy markets and global trade routes. Any sudden escalation could quickly push investors back into gold. That's why many traders are closely watching the $4,500 level. If gold continues holding above that price, bullish momentum could return very quickly. The next few weeks could decide the future direction of the gold market. If inflation remains elevated and the Federal Reserve continues its hawkish stance, gold may face additional pressure from rising yields and a stronger dollar. But if economic growth slows, or financial uncertainty intensifies, gold could rapidly regain momentum. Right now, investors are balancing two powerful forces. On one side, aggressive monetary policy. On the other, fear and uncertainty in the global economy. And that battle is keeping gold trapped near historic levels. Some experts believe this is only a temporary consolidation before another major rally. Others warn that a deeper correction may still be ahead. Either way, one thing is clear. Gold remains at the center of global financial attention. And as long as uncertainty dominates the markets, the fight between Wall Street bears and Main Street bulls is far from over.